Market volatility remained elevated. Yesterday, the euro advanced, but then slid again, coming under pressure from U.S. statistics. The Philadelphia Federal Reserve's monthly manufacturing index improved in August, topping analysts' estimates. The number of Americans filing new claims for unemployment benefits fell further. All this supported the dollar. The highlight on the agenda was China's property giant Evergrande, with more than $300 billion in liabilities, which filed for bankruptcy. This news caused a sell-off in the U.S. stock market, as well as dampened demand for such risky assets as Bitcoin and Ether. Given that the Fed is expected to deliver at least one more interest rate increase, the fact that global economy is under threat and China's property crisis may spread beyond the country does not inspire confidence and is likely to add to downward pressure on risky assets, especially in the second half year. Thus, the medium-term outlook for the euro and the British pound are rather gloomy. As for today's macroeconomic calendar, it's bereft of any important news releases except for data on consumer prices in the euro area. Eurozone annual inflation is expected to be 5.3% in July 2023, down from 5.5% in June. Month-on-month, the consumer price index in the euro area is forecast to decrease by 0.1%. Core CPI will be of great importance to market participants. The indicator is anticipated to remain unchanged at 5.5%. However, an increase in consumer prices will signal further interest rate hikes by the European Central Bank, thus backing up the euro. In addition, traders may take notice of UK retail sales for July, which are expected to fall. A greater than expected decline in sales volumes will help mute price pressures, but weigh on the British pound. And now let's move on to technical analysis. According to the 1-hour Euro-American dollar chart, bears are still leading the market. False breakouts at the levels of 1.0893 and 1.0916 will create sell signals, thus bringing the euro down to 1.0866. If the price forms a false breakout at this mark or breaks above 1.0893 and tests it from the top down, a buy signal will be generated. In this case, Europe's single currency is expected to rise to 1.0916 and probably 1.0951. In this area, I recommend going short on the rebound. Alternatively, if the price fixes below 1.0866 amid reports on cooling price pressures in the euro area, the European currency is likely to suffer heavy losses, sliding to 1.0836 and even 1.0808. At the level of 1.0808, it would be a wise decision to go long on a rebound. Long positions at 1.0836 and 1.0866 can be considered only amid a false breakout. Meanwhile, the British pound consistently hits fresh daily highs. This indicates that an uptrend remains intact. Nevertheless, it has not yet been able to break beyond the channel. For the time being, sterling is under growing pressure. A false breakout at 1.2764 will make it possible to sell the pair. If the price breaks below 1.2726 and tests it from the bottom up, the British currency will face a major sell-off, diving to 1.2688 and 1.2654. At the level of 1.2654, traders are recommended to go long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.2688 and 1.2726 can be opened only amid a false breakout. Anyway, if the price overcomes 1.2726 and fixes below it, this will put an end to a bullish correction, with the pair getting stuck in a sideways range. In the event of a rise, short positions will be relevant amid a false breakout at 1.2764 or on a rebound at 1.2812. In this case, one can count on an intraday correction of 30-35 pips. Good luck and have a nice weekend.